Hello, my name's Rachel and welcome back to my channel. So today I am going to be talking you through why I do not sell my investments when the stock market is going down, when it's falling, when it's crashing, or when it potentially looks like we're going into a recession. Now, I'm going to be completely honest with you and let you know that I am making this video as much for me to remind myself why I will not be selling my investments as much as I am for you. So the last kind of month, few weeks in the stock market hasn't been great at all, and I have personally seen a lot of the investments I have fall, and I need to remind myself why I will not be selling these investments. So I'm going to share some research and stats with you because nothing makes me feel better than a good stat, as well as sharing with you a section from this book, The Psychology of Money, which I really enjoy. I don't know if you can see, but one of my daughters has scribbled on the front of the cover. She obviously really enjoyed it too. So I will share a section from this book as well, which overall makes me and hopefully you feel better about holding on to your investments through difficult times and waiting for them to recover. So when the stock market crashes or enters a dip, or even corrects, it often leads to many people selling off their investments because they feel panicked to see themselves losing money, understandably. And let me tell you from personal experience, it can be really difficult to wait and let the market stabilize. It's very, very easy to go into your investments and think, what have I done wrong? Maybe I need to sell a bit of this and buy a little bit more of this, or maybe I need to sell absolutely everything, when normally the best decision might be just to hold on to the investments that you've made. If you think back to why you actually made those investments in the first place, if you've invested a good amount of your savings into the stock market, you've probably done a lot of research, check that you're happy with the investment, check that you're happy with the risk level, the past performance, check that what you're investing in is something that you really, really want to invest in for the long term. So if you've done all of that research already and it's still looking like it's starting to drop, then all of that research still stands and you have to think about why you invested in the first place. And if you feel that it was a good investment then, it's still a good investment now. You don't necessarily need to sell it just because it's dipping at the moment. So just looking at a bit of research into bear and bull markets. So bear markets being prolonged price declines, normally over 20%. So research has shown that the average duration of a bear market is 1.4 years, compared with 9.1 years for the average bull market. The average decline of a bear market is 41%, whereas the average gain for a bull market is 480%. So it's really important to remember in times like these that often a bear market is temporary. Yes, on average it might last 1.4 years, but it is normally followed by a strong bull market where any losses will hopefully be recovered. The stats then go on to say the biggest risk factor for investors is not the next 41% decline in the market, but missing out on the next 480% gain in the market. So as you probably know, trying to time the market can be incredibly difficult. So this is personally something that I absolutely choose not to do. If I have a lump sum available to invest, I will invest it there and then. And if I want to invest on a monthly basis, I will invest on the same day of every month and make those investments every single month. I don't try and time the market because invariably I will probably miss out on some big gains, so I just invest when I can, as regularly as I can. So now I'm going to share a section of this book with you which really helps to make my point clear. It's from The Psychology of Money by Morgan Housel. And he says, consider what would happen if you saved $1 every month from 1900 to 2019. You can invest that $1 into the US stock market every month, rain or shine. It doesn't matter if economists are screaming about a looming recession or a new bear market. You just keep investing. Let's call an investor who does this Sue. But maybe investing during a recession is too scary. So perhaps you invest your $1 in the stock market when the economy is not in a recession, sell everything when it's in a recession, and save your monthly dollar in cash and invest everything back into the stock market when the recession ends. We'll call this investor Jim. Or perhaps it takes a few months for a recession to scare you out, and then it takes a while to regain your confidence before you get back into the market. You invest $1 in stocks when there's no recession, Sell 6 months after a recession begins and invest back 6 months after a recession ends. We'll call you Tom. How much money would these 3 investors end up with over time? Sue ends up with $435,551. Jim has $257,386. And Tom has $234,476. Sue wins by a mile. He then goes on to say, there were 1,428 months between 1900 and 2019. Just over 300 of them were during a recession. So by keeping her cool during just the 22% of the time the economy was in or near a recession, Sue ends up with almost 3/4 more money than Jim or Tom. So I thought that was a really clear example of how just holding on to your investments through recessions, through market crashes, through bear markets, through bull markets, just holding on to that money and investing regularly when you can really, really add up. Don't try and overcomplicate things. Don't try and time the market. Just hold on to your investments as long as they're investments that you feel comfortable making. So this is something that I personally do. I just hold on to my investments, whatever's happening. And yes, I do think it is scary. I'd love to say I'm one of those people that only looks at my investments every 6 months or every year, but I do have a look at how they're doing every single day. So when they're falling, I see they're falling and I have to really stop myself selling them or moving them around or making rash decisions. So at the moment I am just holding on to these investments and hoping that they do start to pick up again. And if they don't, I'm still going to hold on to them. Anyway, I hope you found this video helpful. Let me know if you have any ideas for future videos down below, because I love making videos that you actually want to see. I've had a few really good suggestions, so I'm just working on those at the moment as well. Thank you so much for all your support. I am so amazed to be over 700 subscribers. I just think that's amazing that anyone wants to watch me waffle on and talk about my own personal investments. So thank you very much for watching and have an awesome day. Bye bye.